Emily, stay right there. Live analysis now. Let's bring in Ewan Stevenson. He's Group CFO of HSBC. Ewan, thanks so much for your analysis today, and we appreciate your time. Let's start on this result because it does appear to be disappointing overall with a miss on forecasts. You've also warned of a deteriorating revenue environment moving forward. Just unpack for us what went so wrong in the quarter.
Yeah, no, I don't think things went so wrong. I think the headline was obviously disappointing for us, but if you unpick that, I think a very resilient performance in Asia. Profits were up Q3 on Q3. We're pretty pleased with the performance we did on costs. But behind that, we had some very high one-offs, particularly things like UK conduct costs. We also had continued weakness in our non-ring-fence bank and in the US, and a relatively weak quarterly performance from our global markets business within global banking and markets.
Ewan, we're seeing, of course, the bank just reported a resilience in the Hong Kong market. Now here we are enduring something like 21 consecutive weeks of protests. Do you expect this to drag on earnings going forward?
Yeah, so we've got two things going on in Hong Kong at the moment. We've obviously got the ongoing trade dispute between US and China and the ongoing protests, both of which are impacting the business. You can see that in the underlying macro data in the economy. Trade numbers are down, tourism down, etc. But overall, we're pretty pleased with the way that Hong Kong's continuing to perform for us. Lending was up in the quarter, deposits were flat. Profits were good. There has been some deterioration in the credit portfolios. The sector that we're most watching at the moment is the smaller end of the small business sector.
Ewan, it's Matt here joining the conversation as well. You flagged today the challenges to your outlook. What is the biggest challenge? You've already gone through some of them. Is it the low rate environment that we're currently sitting in? Is it the uncertainty when it comes to Brexit? Is it Hong Kong? Is it the trade war? What would be sitting, I guess, at the top of the list that concerns you the most as we move into 2020?
Look, I think the biggest single driver of the change in outlook for us at the moment is the shift in the interest rate cycle. If we'd gone back a year, we would have expected rates to be continuing to rise as we look out to 2020 now. Particularly for the dollar block, we're expecting a continued decline in interest rates from here. Markets continue to be a bit choppy, and the geopolitics, particularly around the UK and Hong Kong, are certainly more complex than what we thought a few months ago.
Yeah, Ewan, certainly a very challenging environment out there for you. You do have low interest rates, you've got weak investment banking conditions, at the same time trade conflicts that you've just been highlighting, protests in Hong Kong, Brexit uncertainty, all of these factors are going to be weighing on the firm moving forward. But tell me about some of the initiatives that you're putting in place to enact some savings measures. The FT reporting recently that you're looking to cut about 10,000 jobs. Can you confirm that today?
Look, we're not going to speculate on job cuts. I mean, what we have announced today is that we're looking at reshaping our non-ring-fence bank in the US. Together, those two businesses are just under a third of our capital. We're also looking at some of the complexity that we have as a group in terms of the group cost structure. We'll come back to the market as part of our full year results in February, but you should expect us to take some material action against those parts of our businesses.